Tonight on Market Call, we have David Burrows, president of Barometer Capital Management. He's taking your calls and emails on North American large caps. Hello and welcome to Market Call tonight. I'm Mark Bunting. Thanks a lot for joining us. David Burrows is here, as mentioned. North American large caps is the topic. You can give us a call if you like, toll free, 1-855-326-6266. There's the email address, marketcall@bnn.ca, or you can tweet us at Market Call. Always good to see you.
Great to be here.
Things have changed since you were last here. What kind of sentiment shift have we seen? What kind of rotational shift are we seeing into different sectors out of other sectors?
Sure. So over the last 12 or 16 months, we've had this constant tugging in two directions. You've had soggy economic conditions in varying degrees globally on one side, which has tended to drag the market down over periods of weeks at a time. And on the other side, we've got a very determined set of world central bankers trying to push liquidity into the system. And so when we get down towards troughs, the central bankers act with new policy, as they have recently, and we get dragged back in the other direction. And this tug-of-war has been going on for quite some time. Consistently through the period, there's certain groups that have performed pretty well, and that's been largely dividend growth with pretty predictable cash flows. And then you've had bouts of risk on and risk off. So over the last few weeks, again, we've seen money rotate to some of the riskier assets, some risky assets further out on the curve than others, like, say, materials. And you've seen in each of those cases some consolidation in what we think has been the core theme in this market, which has been more dividend growth. So, you know, I think it depends. You have to pick your poison. You have to decide whether the central bankers' activities ultimately will impact economic growth. And at this point, they've had a bit of a spotty record in the last few months. But it remains to be seen, and I think you have to pick your spots.
It sounds like you're sort of playing both trades in a way. You are focused on dividend growth still, but you're being tactical in gold and energy and the consumer. Explain that.
That's right. Well, you know, if you think about this whole thing as a lever, if you push liquidity into the system, certain things will benefit for sure, right? Like money will work its way into gold, and it will work its way into dividend growth, and it will work its way into the consumer. The question is ultimately whether it can have enough impact on corporations to grow industrial production dramatically and grow demand for materials, which is making a more speculative bet to say it will work as opposed to, you know, we know it will work. So we have taken some tactical exposure in yield-producing energy and specifically in gold. And then consumer, because of course the big beneficiary of low long-term interest rates is the housing market. We are seeing some tangible improvement there. And so arguably the consumer could be in a little better spot, specifically North America. So we've really stayed North American focused. Some people will make a bet on emerging markets. We don't see that yet.
And when you talk about the North American consumer, what kind of companies? Housing related or consumer discretionary?
Well, there are some areas that are housing related that have secular long-term themes. So we like long-term themes as opposed to cyclical. So for instance, while the housing is getting a little better, one particular area that benefits is chemicals. But North America, because of the big boom in energy production, has very low natural gas prices relative to the rest of the world. So North American chemicals companies have a huge tailwind because they've got very low feedstock costs. So they're getting a little bit better on the demand side and lower on the cost side, and the margins are good. So tangibly, you can see it in the numbers. Things are getting better for them. So that's one area. The second place is in some of the consumer-related companies that are not a big reach for a consumer. You know, like some of the restaurant and retailers are benefiting there. But again, specifically North America and not Europe and not certainly Asia.
Right. Okay. Interesting. Let's take a short break here with David Burrows. We'll start getting to your calls and emails and tweets and on North American large caps right after this.